Hello, welcome to Market Monkeys.
This week we're going to talk about the stock market panic.
Let's get into it.
Right, let's start off where we were, I think about a week ago. We were talking about Shopify, Amazon.
Alibaba.
Yeah, that was it. Okay, I'm getting there. All right, let's switch on a bit here. Okay, they've all taken a dip. Now, a lot of people are jumping off, but what I see is this presents us with opportunities, right? And there's been a few this week I've looked at Dollarama this week as well, Scott.
Yeah,
yes,
I know,
not yesterday, yeah. They went down over $15. I quickly scanned the news, the financials, right? And while the analysts are thinking about it, and it shot down $15 on good news. Their earnings this quarter have just gone from 92 cents to 115. Of course, that's really bad news. So they went down $15. So they're going to rebound, which they did. I don't know. I made about 15 bucks in 24 hours per share. Didn't really want them, but I thought, well, they're just taking their time. Down they go. There's lots of opportunity for everybody here. Shopify.
Yeah, Shopify.
Look at Shopify. Their highest they've been in the last 12 months is $151 and change. Right, at the moment they're $127.
Bargain.
And they've gone up $5 today. Do you think they're going to slow down over Christmas? It's like Scott and I said, was it last week?
Nothing's changed.
Nothing's changed for us.
Nothing's changed. It's still going.
And you know what? When their figures come out after Christmas, up you go. You're going to make money.
Well, there's going to be, I'm forecasting there's going to be a bit of a jingle bell run. I think it's going to be a bit of a rally coming up, over the Christmas period. Yeah. Usually there is roughly a little bit of a jingle bell run, as I call it. And we'll have a little bit of a rally up towards Christmas. It usually happens. And anybody out there think Amazon's not going to have a great Christmas? Good luck with that chain of thought, because they're going to have a fantastic Christmas. They're only going up, up, and up. Right. Amazon, in the last 12 months, as I told you previously, they've gone from about $7.53 a share up to their height of $1,213, roughly $500 gain on a $753 share. Right, roughly. Nice. I wouldn't mind that much.
30% is good, isn't it?
Yeah.
Right?
Of course it is.
Fantastic. Right, but let me tell you something. They've taken a bit of a dip. Right, they're down at about $1,158 at the moment. So, you're $50, $60 light. Do you think they're not going to make that up in the next coming year? Oh, I think they will. Want to make some money? Buy some Amazon.
There we go.
It's not exactly hard, is it? Nvidia. Tell me about
that's
Nvidia.
Another one. Yeah, that one there, that's taken a bit of a dip in the past few days.
Yeah.
I bought in around about the 180. It shot up to nearly close to 220. Then within a couple of days, it dropped back down to 184, 185. It's a time when a lot of people start to think, oh my God, should I get out before I lose any more? Just stay calm, relax. It's just a dip. It's just a lot of these companies that are buying in, like the institutions, things like that. Sometimes they have these times come up with December, January, where they're looking to buy in and sell out around these periods because they want to consolidate their gains and get rid of their losers, sell into some of their winners. They want to, so they have a good. So it looks good on the books, basically.
Yeah, and it looks good when it gets to the tax man. If they're going to show losers, so they alleviate their capital gains.
So what happens is when you see these high volumes, people start panicking, thinking, oh, they're on the way down. Then they all start jumping off. Right. Don't be one of them. Yeah. Stay calm, relax, keep your plan in place, and take opportunity here.
Mind you, if there's 1 million people watching this episode, we don't want you all to stop selling, because I like the dips. Because when the dips come, that's the time to go in. And if you know you've got a solid company, just take Dollarama yesterday, right? I'm only talking about that one a bit more than normal, because that's the one I jumped in on. I put a few other people in it, but some did, some didn't go in it. But how does a company that's gone from 92 cents a quarter, everything's good, there's no bad news, go up to 115 cents a quarter on quarter, how does the company go down and everything else in their financials is positive? Panic. And then as soon as somebody starts going out, they all start going out. The analysts take a lot of time reading through deeply into these figures. I just scanned over it, bump in. And you've got to, If you've got solid companies,
why you're buying it and what you're looking for. When you see that everything is good to yourself and you believe everything's good, not a problem, you take and you make your own decisions.
Yeah.
Right.
And just let you know, recently I've just been buying into Shopify. I shot into Dollarama yesterday, but I've been snapping up Shopify because I see the future on the way down. Because I've been, and when we talked in a previous episode about cost averaging, I've been cost averaging down. As they go down, I've been snapping up more. So that's just let you know what we do.
More, yeah. But that doesn't mean that when you see it drop down 50% or 90%, you just don't worry, you just keep buying. That's not necessarily the case. When you see companies that are dropping off a cliff, you sort of stand back and you say, well, hang on a minute, what's going on?
Yeah.
That's not when you're seeing the trend is going well and it's just taken a dip. Everything's still going well. Nothing's really changed. They haven't come up against any massive obstacles like the government coming in and saying, okay, you're not trading anymore because there's massive problems.
Well, it was similar to that one I bought earlier in the year. I think it was April, May, when I bought Home Capital Group. And they lost 65% in a day. Right, and I did do my due diligence. I did read up all information I could find anywhere, and I did look at their assets. So I didn't just pile in, but I did pile in at $6. They're now $17. And change.
And then when Buffett went in, then it was really sort of good to secure it and not to panic, right? With a lot of people. So then the volatility just died.
Yeah,
right.
Short sellers are still, they're sort of fading away. They're still there, but you know what? I still think it's a $25, $30 share in the future. That's Home Capital Group, by the way. Just deviating a little bit there, talking about something I bought earlier in the year to show you that something can drop off 65% and still be a great buy, but you've still got to read the information and still got to look at the financial and see what the assets are. Because sometimes the assets outstrip. If the company was to go bust, it doesn't mean you wouldn't get your money back. It means that the company's still got assets worth more than the price that you've just bought the share for.
Yeah, in certain cases.
In certain cases, like that stock's got a stock at a share price, an asset price of $21 something in a share at the time, and I was buying them at $6, so $6.
So it made sense at the time.
So it made sense at the time for me to do that. So I looked into that, but there are lots of opportunity there. But listen, anything he has helped you out, subscribe. We need subscribers.
It's free.
It's free.